Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on natural gas. Hope you're having a good weekend, and we see the bulls trying to turn things around, and we have a better opportunity. Well, it's really the same opportunity that we had last time. We had a pullback with the low of 2927 and then another low of 2923. So right around the same level, we had a bullish reversal candlestick. No confirmation on Thursday, but here we are again building a double low right at the same level, 2888 and 2882. So still trying to build a base of support, but we must confirm a reversal candlestick and see another green day on Monday to indicate that our new higher low is set. So we have our low down here at 2815. We need a higher low. This would be a good spot for the bulls to show up. And if we see a break of the high of Friday, 2965, it will be more than likely that we see confirmation of that candlestick. So we have a lower high pattern ever since the consolidation began, and the bulls want to break that with a nice green day on Monday. So on the weekly time frame, we had a 2-week bounce, oversold bounce. Now we're pulling back, and we have to form a higher low. Same thing on the weekly time frame. So the bulls are hoping that 2882 is that level. So really not liking the weekly time frame in terms of details on this bounce attempt. You really want to be looking at the daily time frame to get the clear higher lows and the lower highs that the bulls need to break. And zooming in even further on the hourly time frame, we can get some more details and see that we topped out on a bounce attempt at 2969, and we just topped out the end of the week 2965. So a clear resistance there that the bulls want to get above, and they will start to prove their momentum significantly. First step is 2969, but if we get over this high here of 3006, not only will we get over the $3 psychological resistance level, but we'll start to work on some areas that don't have a ton of resistance in the low $3 range. So that's the goal for the bulls. You can see these clear lower highs, and we're on the verge of breaking the first lower high. Still hasn't happened yet, and I was watching a tightening pattern here on Friday with a lower high pattern and a base of support being built. We did get a bullish break there, but in terms of breaking the lower highs, the actual prices themselves still has yet to happen. So the bulls need to remain skeptical, but if we start Monday heading up towards $3, that'll be an ideal start to the week for the bulls. So looking at UNG, after the bull oversold bounce began to play out, we've seen some nice healthy consolidation. The middle Bollinger Band is leveling out, and it's going to begin ascending. That level is 692. That's the level the bulls ideally want to hold. They want to form a higher low and look for continuation to the upside. And I look at this chart, and it doesn't really, nothing really stood out to me. And this is why it's important to be looking, if you're playing ETFs or commodities that have both directions, look at both charts. Even if, let's say, I'm a diehard UNG bull here, I'm going to be looking at DGAS just to see if I can see anything visually that stands out in terms of patterns. I can say, okay, DGAS is going to be the exact opposite action of UNG and leave it at that. Or I could actually look at the chart and try and find some clues. So I look at this chart on DGAS, and I see the pullback. And compared to where we came from, it's not a very significant pullback. The bulls are still in control, but this bounce attempt stands out to me as a potential bear flag. As of that big pullback, a weak bounce attempt, and then potential continuation to the downside. So that stood out to me more than a bull flag did on UNG. And now that I do look at it with a different perspective after seeing that bear flag, it does look a lot more like a bull flag. So seeing that different perspective from the opposing side of the inverse ETF definitely did lead to me picking out a pattern that I otherwise might not have stood out to me visually. So we'll be watching for the potential of this to be a bull flag on consolidation, where we have our parallel support and resistance channel, and we'll be looking for a bull break there. And just like on DGAS is the potential for a bear flag with a weak bounce attempt and parallel support and resistance. And it's not even really developed at this point. The parallel support line is more developed than the resistance line, but just keeping a close eye if that were to play out and if the natural gas bulls do break this lower high pattern on the hourly time frame. That's what it all boils down to, whether or not the bulls can do that once we begin trading again on Sunday night. So where we currently stand in terms of specific levels on UNG bears want to see a break of the low we've seen so far of $7, and the bulls want to see a break of the lower high pattern. 716 and 719 would be the start of breaking the bull flag for continuation up to our recent 742 high. And for DGAS, the bulls want to see a break over the highest price that we've seen so far, up 26.79, and the bears want to see a break of 25.27. This inside candlestick shows the tightening range. We have DGAS and UNG with daily inside candlesticks on Friday. So a break is imminent of that inside candlestick on Monday. The weekly time frames for UNG, again, it's that same pattern for natural gas. Looking at it from a different perspective on DGAS, can't lose sight that we are in a long-term downtrend on DGAS, but we do have to keep in mind a lot of that is due to time decay, where we have the time decay inevitably driving the price to zero, and we'll just continually have reverse splits. So taking that weight into account, but it is still a lower high pattern on the weekly time frame, and the bulls are nowhere near changing this trend to favor the bulls in the long term without seeing pretty much a 60% move from where we currently stand. So we have to keep in mind where these leveraged ETFs that are fighting not only a trend that has been in play for quite some time, but time decay, they're really going to have a difficult time turning around the overall longer term trend. So that's what we've got heading into next week. We'll have James back on tap on Monday, and a very important Monday is coming for the short term. Natural gas bulls need a green day and a break of the lower high hourly pattern. Hope you have a great Sunday. See you soon.